Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A third bearish black crow on Friday and a follow-on low to the previous session's bearish closing black Maribosa and prior bearish Harami. However, I think the key feature was what these three sessions created, visible here and across many other pairings. And that was a weekly key reversal down last week. We'll have to see if these actions have an impact this week and in the following weeks. But Friday closed below the gently descending green short medium moving average, currently at 103.87, penetrating the congestion at 103.69, but halting ahead of the congestion band below that between 103.32 to 103.49, containing the December 2016 low at 103.49 and the January 2017 low at 103.40. This congestion band below is the next key zone to watch. Now, so far today, a higher open and straight from the open, a move higher over the green short medium moving average, and looking at the bright red overhead reverse head and shoulders neckline and downtrend combination, currently at 104.72. Just above this is the declining mauve medium moving average, currently 105.07. Cable, aka sterling against the US dollar. A second bearish black crow on Friday and a follow-on low to the previous session's combined bearish engulfing pattern and bearish closing black Maribosa. However, I think the key feature was what these pair of sessions created, visible here and across many other currency pairings, and that was a weekly key reversal down last week. Now we'll have to see if these actions have an impact this week and in the following weeks. Friday was a second close back within the previously mentioned dark blue mid-January to mid-February ascending wedge pattern, which is currently 124.43 to 126.28, as well as a whole day's action below the declining medium moving average, and that's currently 126.17. For the moment, I'll continue to maintain the topside primary target X at 129.15 and the secondary harder to reach target X1 at 131 even for a break out of this pattern, but I'm increasingly of the view that this move higher may have been a false break. Meanwhile, below we have the flatlining green short medium moving average, currently 124.67, which is within a newish congestion zone between 125 down to 123.55. This zone also contains a dark blue lower trend line of the ascending wedge pattern. Now, so far today, a higher open up through the mauve medium moving average and the upper trend line of the dark blue ascending wedge pattern. Now looking once again at the September 2020 low and the 50% Fibonacci line just above that. US dollar against the Japanese yen. A second bullish white soldier on Friday and a notable feature absent here when compared to many other currency pairings. There was no weekly key reversal up in the dollar here. I'll just let that settle in your mind for a bit. Anyway, this move higher continues to be a somewhat reactionary bounce up from the lesser Fibonacci support at 148.68, closing for a second consecutive session back up over the 50% Fibonacci line of the July 23 to July 24 move at 149.61, and penetrating, though not closing over, the next 50% Fibonacci line for the whole of the 2024 move at 150.76. In the process, the middle of last week could arguably have been forming a 3-day bullish morning doji star pattern. As I've mentioned previously, this region was the low back in early December last year and was the only obstacle left from the market forming an early December 2024 to date rounded top pattern. We have now formed that rounded top, but we've chosen for now not to exploit it on the downside. Meanwhile, overhead is the dark blue lower uptrend, broken uptrend, currently 151.63, of the breached mid-December 2024 to date possible shallow bull channel. We are below it, but I have misgivings about this possible bull channel, as we haven't touched the channel sides enough times, so I have not placed any targets below for it as yet. It all now depends if the prices exploit the rounded top or go on to form yet another pattern. And I have some nascent thoughts about that, which I'll reveal in due course if it happens. Now, so far today, a reactionary lower open, though peaking slightly higher than Friday's high, still over the 50% Fibonacci line at 150.76, though coming back down again and now looking like a indecisive doji cross of all things. US dollar against the CNH, the offshore Chinese yuan. A reactionary bearish harami on Friday, and even a possible 2-day bearish tweezer top in the offing. I'll have to see on that one. As prices were capped by the combination of the flatlining green short medium moving average, currently at 730.01, and the bright green upper time, currently at 729.63, the late December 2024 to late January 2025 bearish Andrews pitchfork, where it was stopped dead once again. However, despite these bearish action, I think the key feature for what the action last week in an overall sense created and made visible here and across many other pairings, and that was a weekly reversal up last week. We'll have to see if these actions have an impact this week and in the following weeks. Further overhead is the July 2024 high at 731.13, and then limited resistance until the congestion band between 734.41 to 734.96. Meanwhile below, we have the influential dark blue upper trend line, currently at 725.5 of the January to March 2024 ascending triangle pattern, and the rising mauve medium moving average, currently at 725.94. There is still the possibility, though I personally doubt it, of looking at the whole late November 2024 to date action as a possible double top, even Adam type. Now so far today, a reactionary move back up through the bright green upper tine, and thus prompting me to start thinking about morphing this bearish Andrews pitchfork into a much shallower bearish shift pitchfork pattern. Prices also drove up through the green short medium moving average, but have pulled back down before looking again at that, moving back up to look at that July 2024 high at 731.13. US dollar against the Brazilian real. A third bullish white soldier on Friday and a follow-on higher to the previous session's bullish closing white Maribosa, an earlier immediate countering key reversal up. Prices pushed up over the March 2021 high at 588.04, as well as the slowly rising mauve medium moving average, currently 590.05, and the mid-December 2024 to date downtrend, currently 590.59. However, the market only managed to close over the March 2021 high. I have some doubts about the downtrend, as it is only a 2-pointer, and those points are fairly close together. Overhead, we now have the declining green short medium moving average, currently at 595.69, and the May 2022 high at 597.08. Looking below, and we still have the combination of the rising gold long moving average, currently 570.19, and the bright red breached but seemingly repaired May 2024 to date uptrend, currently at 575.81. Now, this combination had been guiding prices higher since the middle of last year. I've also for the moment still left target X in the 563.35 zone, and the secondary target X1 down at 541.95 on my daily chart. These are the primary and secondary targets for the drop from the large early October 2024 to mid-January 2025 rising expanding wedge pattern, though I'm now starting to have thoughts about retiring them. Now, as a final item, it should be noted that the rising mauve medium moving average and a March 2021 high, both now just above the market, well, neither of these two were much use as support on the market's way down, so I'm wondering if they will be any good as resistances on the way up. US dollar against the Mexican peso. A second bullish white soldier on Friday after the previous session's bullish harami that was just about that, but was also a possible fourth consecutive indecisive spinning top pattern. Now, one could argue that Friday's action could conceivably also be seen as a higher, though still an indecisive spinning top. It's a stretch, I grant you, but it could be seen somewhat. In recent days, prices have been centered actually around the flatlining green short medium moving average, currently at 20.46.42, and capped by the September 22 high at 20.57.65, which was penetrated on Friday, but prices still closed under it, and at the same time supported by the combination of the slowly rising mauve medium moving average, which is currently at 20.33.28, and the bright red lower trend line stroke uptrend, currently 20.33.34, of the early November 2024 to date bull channel, and that's currently 20.23.34 to 21.03.95. This bright red shallow bull channel has been the driving pattern here since last year. Now, so far today, a lower open and prices pushing down through the green short medium moving average, though we're not maintained the bearish pressure. Right now we're looking at the mauve medium moving average below.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.